The Federal Reserve and Ripple. Fact versus speculation. The global financial system is entering a period of radical transformation. The Federal Reserve, the central bank of the United States, has begun rolling out FedNow, a new instant payment system designed to bring America's financial infrastructure into the digital age. At the same time, Ripple Labs and its digital asset XRP continue to expand their footprint as pioneers in real-time cross-border settlement. For years, a persistent question has echoed across crypto forums, banking conferences, and YouTube comment sections. Is Ripple secretly working with the Federal Reserve? It is a question that cuts to the heart of how money will move in the 21st century. If true, it would mean the very backbone of the U.S. financial system is already connected to Ripple's technology. A revelation that could reshape both XRP's value and the future of finance itself. If false, it still highlights how closely Ripple's vision aligns with the Fed's goals for speed, efficiency, and interoperability. FedNow, America's first step toward instant payments. In 2023, the Federal Reserve launched FedNow, a service built to allow banks and credit unions to send money instantly, 24/7, without relying on outdated batch settlement systems. Its mission: to modernize domestic payments, reduce delays, and keep up with global competition. At its core, FedNow mirrors Ripple's vision: faster, cheaper, more reliable transactions. But here's the critical distinction. FedNow is limited to domestic U.S. payments, while Ripple has always targeted the global cross-border settlement market. This leaves an open question. Could the two systems eventually complement one another? Ripple and the Federal Reserve. The documented links. What we know for certain is this: Ripple has not been silent in Washington. As early as 2017, Ripple was invited to participate in the Federal Reserve's Faster Payments Task Force, a working group that shaped the recommendations for the U.S. Instant Payments Roadmap. Ripple's proposals for blockchain settlement were officially included in the Fed's published materials. Furthermore, Ripple executives have maintained ongoing conversations with regulators and policymakers, often appearing at congressional hearings, IMF roundtables, and global banking events. Their message has always been the same: blockchain can power faster, safer payments, and XRP can serve as a neutral bridge asset for settlement. This is not speculation. These are facts documented in Federal Reserve Task Force archives, Ripple's public communications, and official U.S. reports. Where fact ends and speculation begins. But speculation arises from the timing and the silence. FedNow was unveiled in 2019, just as Ripple was scaling its on-demand liquidity (ODL) corridors around the world. Both entities share the same mission: real-time payments. Both are ISO 2022 compliant. And Ripple's deep relationships with banks worldwide make them a natural candidate to interlink with FedNow, especially as cross-border payments remain unsolved. The Federal Reserve has never confirmed a direct partnership with Ripple. Yet the circumstantial alignment is too strong for many to ignore. Could RippleNet or the XRP Ledger quietly sit in the background of America's new payment rails? Or is it simply that Ripple's vision and the Fed's modernization path happen to align? The stakes for investors, the answer carries weight. If Ripple plays a role in FedNow, or in the broader US CBDC project that has been hinted at by policymakers, XRP could instantly gain credibility as the neutral settlement layer for the dollar and beyond. On the other hand, if the connection is purely speculative, XRP's adoption path will still rely on its international corridors, institutional partners, and ongoing regulatory clarity. This series will separate the facts from the rumors. We will examine Ripple's documented history with the Federal Reserve, analyze the role of FedNow in the payments landscape, and explore where XRP could realistically fit. Along the way, we will look at the broader implications for the US dollar, central bank digital currencies, and the race to modernize money in a world where tokenization and real-time settlement are becoming the norm. The story of Ripple and the Federal Reserve is not just about partnerships or speculation. It is about the future of money itself. Part 1. The birth of FedNow and Ripple's early engagement with the Fed. The United States has long prided itself on financial leadership. Yet in the early 2010s, when it came to instant payments, America was falling behind. Countries like the United Kingdom, Japan, and later China were already deploying real-time payment systems. In Europe, The SEPA instant credit transfer framework was gaining traction. Meanwhile, U.S. banks still relied on ACH transfers that could take days, or expensive wire services that weren't accessible to everyday consumers. This gap in infrastructure created urgency at the Federal Reserve. In 2015, the Fed established the Faster Payments Task Force, a collaborative group of banks, credit unions, fintechs, and technology providers. Its mission was bold: design the framework for a U.S. payment system that could move money instantly 24/7. Among the dozens of participants, one name stood out: Ripple Labs. Ripple's seat at the table. Ripple wasn't just another startup. By 2015, it was already presenting its distributed ledger technology as a solution to real-time settlement. Ripple argued that traditional systems were too fragmented, too slow, and too costly. Their pitch was simple but revolutionary: use blockchain technology and a digital asset, XRP, as a neutral bridge to settle payments instantly between banks, regardless of currency or geography. This was not an informal relationship. The Federal Reserve formally listed Ripple's solution in its Faster Payments Task Force reports. In 2017, Ripple's proposal was highlighted in the Faster Payments Effectiveness Criteria document, which outlined requirements for the new system: speed, security, efficiency, and broad accessibility. Ripple's inclusion placed it in the company of giants like Visa, MasterCard, and the Clearinghouse. The significance is undeniable. Ripple was and remains the only blockchain company to have its technology included in a Federal Reserve-sanctioned payment modernization roadmap. The genesis of FedNow. After 2 years of research and consultation, the Federal Reserve announced in 2019 it would build its own instant payment service, FedNow. This marked a turning point. Rather than outsourcing instant payments to private players, the Fed decided to take direct control of the nation's new rails. FedNow's design reflects many of the same goals Ripple had been promoting: 24/7 365 availability, final settlement in seconds, interoperability between institutions, alignment with ISO 2022 standards. To many observers, the parallels were striking. While FedNow was not blockchain-based, the mission echoed Ripple's language almost word for word. This fueled speculation. Had Ripple's participation in the task force influenced FedNow's design? Ripple's global momentum. While the Fed was finalizing its domestic system, Ripple was moving full steam ahead internationally. By 2018, RippleNet had signed up more than 200 financial institutions worldwide. Its on-demand liquidity, ODL solution was beginning to use XRP in live corridors, proving that real-time settlement could work on a global scale. This momentum gave Ripple credibility. When the Fed announced FedNow, critics asked, why reinvent the wheel? Ripple had already built a network designed for speed and interoperability. Some speculated that FedNow was simply a US-centric version of RippleNet, designed to keep control in domestic hands. The missing link here lies the crux of the debate. Ripple had the technology, the Fed had the mandate. Ripple was included in the early design conversations, and its proposals aligned with what FedNow ultimately became. But there has never been confirmation that Ripple's code or XRP plays any role in FedNow. For Ripple supporters, the circumstantial evidence is overwhelming. Inclusion in official reports, alignment of goals, and the timing of events. For skeptics, the lack of confirmation proves Ripple's role was purely advisory. Interesting, but not integral. The stage is set. By the time FedNow launched in 2023, Ripple had already achieved global recognition as a leader in cross-border payments. The Federal Reserve, meanwhile, positioned FedNow as a tool for domestic modernization. Yet their paths remain parallel, occasionally crossing in conferences, working groups, and regulatory conversations. This overlap leaves us with one pressing question. Did Ripple quietly influence the rails of America's payment future? Or are we simply witnessing two organizations arriving at the same solution from different directions? What cannot be denied is this: Ripple had a seat at the table during the most critical phase of America's payment modernization, and its fingerprints are present in the very criteria FedNow was built upon. Whether Ripple is officially inside the system or not, its ideas have already helped shape the U.S. payments landscape. Part 2. FedNow today. Strengths, limitations, and the Ripple comparison. When the Federal Reserve officially launched FedNow in July 2023, it was hailed as a milestone in modernizing America's financial infrastructure. For the first time in U.S. history, banks and credit unions had access to a real-time 24/7 domestic payment system run directly by the central bank. For everyday Americans, it promised faster bill payments, instant wage access, and smoother peer-to-peer transactions. For businesses, it offered the potential to streamline payroll, settle invoices instantly, and reduce costly delays. FedNow is without question a major step forward, but to understand its role in the global context, it must be compared directly with Ripple's offerings. And here, the strengths and weaknesses become clear. FedNow addresses a problem that has long plagued the U.S. economy: the inefficiency of ACH transfers and batch-based clearing. With FedNow, settlement can now happen in seconds instead of days. This reduces overdraft risk, improves cash flow for businesses, and makes the U.S. more competitive with regions like Europe and Asia that already had real-time payment systems. Another strength lies in trust and adoption. Because FedNow is operated by the Federal Reserve, it carries the credibility of the U.S. central bank. Banks that might hesitate to adopt private sector systems are far more likely to onboard FedNow, knowing it comes with direct government backing. Within its first months, dozens of institutions, from community banks to giants like JP Morgan Chase and Wells Fargo, were already participating. Finally, FedNow is designed to align with ISO 2022, the new global standard for financial messaging. This ensures interoperability with the international payments ecosystem, even if FedNow itself remains domestically focused. For all its progress, FedNow has serious limitations. The most obvious is that it is domestic only. FedNow does not solve the problem of cross-border payments, where settlement is slow, expensive, and fragmented. International money movement, whether for trade, remittances, or investment, remains trapped in the old system dominated by SWIFT and correspondent banking. Another limitation is technology. While Ripple's system was built on distributed ledger technology, FedNow still relies on traditional centralized infrastructure. It is efficient, but it lacks the transparency, programmability, and potential liquidity advantages of blockchain. This centralization also means less flexibility. Upgrades and innovations depend entirely on the Federal Reserve's pace. FedNow also does not natively incorporate a bridge asset like XRP. Banks and businesses using FedNow still need to rely on fiat rails. This leaves inefficiencies when moving between currencies, especially in a world where tokenization and digital assets are gaining ground. Ripple's comparative advantage. RippleNet, especially with on-demand liquidity, ODL, powered by XRP, was designed from the start to solve what FedNow cannot: cross-border settlement. With ODL, money can move from one country to another in seconds using XRP as the intermediary asset to eliminate pre-funded accounts. In contrast, FedNow's focus is narrow: domestic transactions only. This means Ripple and FedNow are not competitors but potentially complementary systems. FedNow could handle instant US dollar payments inside the country, while RippleNet could bridge those payments globally. Another comparative strength of Ripple is its global footprint. By 2025, Ripple had established partnerships with major financial institutions in Asia, Europe, Africa, and Latin America. Its corridors already serve as proof that blockchain-powered settlement can reduce costs and increase speed at scale. Why the comparison fuels speculation? Because Ripple was present during the early design of FedNow, and because the two systems share so many conceptual similarities, speculation continues to grow. Some believe Ripple's technology may one day be integrated into FedNow, especially for international use cases. Others argue Ripple could serve as the cross-border extension to FedNow, with XRP providing the liquidity bridge. Still, the Federal Reserve has remained silent. Officials present FedNow as entirely homegrown, without acknowledgement of Ripple's past contributions. This silence, combined with Ripple's public involvement in Fed task forces, has created a vacuum where speculation thrives. The bigger picture: FedNow's launch has moved the U.S. into the real-time payments era, but it has not solved the larger challenge of the global Internet of Value. That remains Ripple's mission. The overlap in goals, instant settlement, efficiency, ISO 2022 compliance, ensures that comparisons will persist and the possibility of collaboration remains open. The narrative is not whether FedNow will replace Ripple, but whether Ripple could become the missing link that makes FedNow part of a global system. Part 3. Ripple, the Federal Reserve, and the central bank digital currency question. The emergence of central bank digital currencies, CBDCs, has become one of the defining debates of modern finance. Across the globe, central banks are exploring digital forms of national currency that combine the trust of fiat with the efficiency of blockchain. China is far ahead with its digital yuan, while the European Central Bank is testing a digital euro. The United States, however, has been more cautious. And here again, Ripple's name enters the conversation. The US CBDC debate. The Federal Reserve has not committed to launching a digital dollar, but it has studied the idea extensively. Through research papers, pilot projects, and congressional hearings, the Fed has acknowledged that a CBDC could increase payment efficiency, improve financial inclusion, and secure the dollar's status as the world's reserve currency. At the same time, it has raised concerns: privacy, cybersecurity, banking disruption, and the need for bipartisan political support. As of 2025, the Fed's official stance is cautious. It has said no CBDC will be issued without approval from Congress and the White House. Still, behind the scenes, the groundwork is being laid. Technical explorations are underway, and private sector input has been solicited. Which brings us to Ripple. Ripple's digital currency work. Ripple has been positioning itself as a partner for governments looking to issue CBDCs. In 2021, Ripple announced a CBDC Private Ledger, designed specifically for central banks. This technology is based on the XRP Ledger, but adapted to give governments full control over issuance and privacy. Ripple has since worked with at least a dozen central banks and monetary authorities, including partnerships with Bhutan and Palau to pilot sovereign digital currencies. The key advantage Ripple offers is its proven experience in settlement. While many CBDC projects are still conceptual, Ripple's technology is already moving billions globally. This gives Ripple credibility that few other blockchain companies can match. The Federal Reserve and Ripple. Fact versus speculation. Here lies the delicate question: is Ripple helping the United States with CBDC research? Fact: Ripple has directly engaged with U.S. regulators and policymakers. Ripple representatives have testified in congressional hearings about digital assets and CBDCs. Ripple's inclusion in the Faster Payments Task Force also demonstrated that its expertise was valued in official modernization efforts. Fact: Ripple's CBDC Private Ledger is one of the most advanced platforms available for governments. Its technical capabilities align with many of the Federal Reserve's published requirements: scalability, interoperability, privacy options, and ISO 2022 compliance. Speculation. Nowhere has the Fed confirmed that Ripple is involved in its CBDC explorations. The Federal Reserve Bank of Boston, working with MIT, developed its own Project Hamilton to test digital dollar architecture. Publicly, the Fed emphasizes independence and neutrality, avoiding ties to any single private company. This is where the divide emerges. Supporters argue that Ripple's proven technology makes it the most obvious candidate for U.S. pilots. Skeptics point to the Fed's tradition of independence as evidence that Ripple's role is minimal. Ripple's strategic position. Even without official confirmation, Ripple benefits from the debate. Every time the Fed acknowledges the possibility of a digital dollar, Ripple's CBDC ledger is compared to the U.S. vision. Every time the Fed emphasizes cross-border efficiency, Ripple's role in international corridors becomes more relevant. The real value for Ripple may not be in building the US CBDC directly, but in providing the global interoperability layer. Imagine a world where dozens of central banks issue CBDCs, each controlled and siloed. Something must connect them. Ripple's technology and XRP as a neutral bridge could provide that missing piece. The broader implications. The CBDC debate is not just about technology, it is about geopolitics. The US cannot afford to fall behind China, which is already testing cross-border use of its digital yuan. Ripple's alignment with global standards and its deep ties to the financial sector make it a natural candidate to help the US dollar stay competitive. Whether or not Ripple is directly involved with the Fed's CBDC pilots, its role in shaping the conversation is undeniable. Ripple has already proven that blockchain can modernize payments. The question is whether the Federal Reserve will adopt Ripple's ledger, build its own, or find another path. What remains clear is this: As the US debates the digital dollar, Ripple sits at the intersection of speculation and credibility. Its name too prominent to ignore, its technology too advanced to dismiss. Part 4. The Institutional and Market View. How Banks, Wall Street, and Regulators See Ripple versus FedNow. While much of the discussion about Ripple and the Federal Reserve centers on technology, the real test of adoption lies in the views of banks, institutional investors, and regulators. These groups ultimately decide which rails money will move on. Their perceptions shape the future of both FedNow and Ripple's XRP-powered solutions. The banking perspective. For U.S. banks, FedNow represents a long-awaited modernization. Smaller institutions in particular view it as a lifeline. In the past, instant settlement was dominated by the clearinghouse's RTP network, a private sector system controlled by large banks. FedNow offers community banks and credit unions a chance to compete on equal footing. From this lens, FedNow is a domestic equalizer. It creates an instant payment backbone that every U.S. financial institution can access, regardless of size. Banks trust it because it is operated by the Federal Reserve, giving it an air of neutrality. Ripple, however, is seen differently. For U.S. banks still wary of crypto, XRP remains controversial despite Ripple's institutional focus. Yet, internationally, banks in Asia, the Middle East, and Latin America have embraced RippleNet because it solves cross-border inefficiencies that FedNow doesn't touch. For many global banks, Ripple is not an experiment. It is already part of their daily operations. Wall Street's prospective institutional investors and Wall Street giants look at Ripple and FedNow through the lens of market opportunity. FedNow is seen as a safe bet, a government-backed improvement to the U.S. payment system. It modernizes infrastructure but does not fundamentally disrupt financial markets. Ripple, on the other hand, is viewed as both a risk and an opportunity. The SEC lawsuit that shadowed Ripple for years raised red flags. But the eventual legal clarity granted to XRP in 2023 dramatically changed sentiment. Suddenly, XRP was no longer too risky for many institutions. Funds like Galaxy Digital and Fidelity began exploring XRP exposure, while analysts at global banks started publishing research on Ripple's role in liquidity and tokenization. For Wall Street, Ripple represents upside potential that FedNow does not. FedNow is infrastructure. Ripple is both infrastructure and an investable asset. If XRP becomes integral to global settlement, early institutional positioning could prove lucrative. The regulatory view. Regulators approach Ripple and FedNow with different mandates. For the Federal Reserve and the Treasury Department, FedNow is a controlled modernization project, domestically focused, safe, and fully under government oversight. Its role is to strengthen U.S. financial infrastructure, not to reinvent it. Ripple, however, challenges the regulatory mindset. By positioning XRP as a neutral bridge asset, Ripple implicitly calls for a global liquidity layer that sits outside any single government's control. While some regulators see this as innovation, others see it as a threat to monetary sovereignty. The SEC case against Ripple was emblematic of this tension. When Judge Torres ruled in 2023 that XRP sales on exchanges did not constitute securities transactions, it was a turning point. It gave Ripple the regulatory clarity it needed to expand, even as the U.S. government continued to push its own domestic solution in FedNow. Complementary, not competitive. Despite the different perceptions, a consensus is emerging. FedNow and Ripple are not enemies. Instead, they serve different markets. FedNow strengthens U.S. domestic payments, while Ripple targets cross-border settlement. In fact, many analysts believe they could become complementary layers of the same ecosystem. Imagine a scenario where a U.S. business pays a supplier abroad. FedNow could handle the instant dollar transfer inside the U.S., while RippleNet could settle the cross-border leg, converting dollars into pesos, euros, or yen using XRP. Together, the two systems would offer seamless domestic and international functionality. The market implications. This complementary vision is why speculation persists. If banks and regulators eventually link FedNow and Ripple, it would create a powerful hybrid system, domestic strength paired with global reach. For investors, this possibility fuels long-term optimism about XRP's role. Even without explicit confirmation of partnerships, what we know today is this: banks trust FedNow, institutions are warming to Ripple, and regulators are slowly providing clarity. The pieces are aligning for a financial future where both systems coexist, each serving a critical role. Part 5. The future of Ripple and the Fed, coexistence, competition, or convergence. As FedNow expands its footprint and Ripple continues building global corridors, the central question remains: will the Federal Reserve and Ripple evolve as separate paths, or could they eventually converge into one interconnected financial system? Coexistence, parallel rails. The most realistic short-term outcome is coexistence. FedNow focuses on U.S. domestic payments, while Ripple and XRP continue solving cross-border settlement. Each system fulfills its own niche. For American consumers, FedNow improves everyday banking, instant paychecks, bill payments, and peer-to-peer transfers. For global banks, RippleNet reduces the cost and complexity of international money movement. In this model, Ripple and FedNow grow in parallel, occasionally touching but largely independent. This outcome is the safest politically, as it allows the Federal Reserve to retain full control of domestic payments without appearing to outsource critical infrastructure to a private company. Competition, Ripple versus the Fed. A less likely but still possible scenario is competition. If Ripple were to gain massive adoption within the U.S., perhaps through partnerships with large commercial banks or fintech giants, it could challenge FedNow's relevance. After all, if RippleNet can handle domestic and cross-border payments instantly with lower costs, why would institutions rely on FedNow? This scenario would create friction between Ripple and regulators. U.S. authorities are unlikely to allow a private blockchain company to replace domestic rails. However, Ripple's technology could still outpace FedNow internationally, creating indirect competition for influence over the global standard of payments. Convergence, the hybrid future. The most intriguing possibility is convergence. In this future, FedNow serves as the domestic backbone for U.S. payments, while RippleNet, powered by XRP, acts as the bridge to the rest of the world. Together, they form a seamless pipeline. Dollars move instantly within the U.S. via FedNow, then flow across borders via RippleNet. This hybrid model has strong logic. It allows the Federal Reserve to maintain sovereignty over domestic payments while still connecting to a global liquidity network. For Ripple, it cements XRP's role as the neutral settlement asset linking national systems together. For banks and businesses, it offers the best of both worlds: government-backed domestic rails paired with blockchain-powered international reach. The role of CBDCs. In a convergence model, central bank digital currencies could accelerate integration. If the U.S. eventually launches a digital dollar, FedNow could serve as its domestic payment engine. Ripple, with its CBDC Private Ledger, could then connect the digital dollar to other CBDCs abroad. In this way, Ripple becomes the interoperability layer, the plumbing that allows digital currencies to transact across borders without friction. This vision aligns perfectly with Ripple's long-standing mission, the Internet of Value, where money moves as seamlessly as information. Risks to the vision. Of course, there are risks. The Federal Reserve may choose to develop its own cross-border solution, bypassing Ripple altogether. Political resistance to integrating blockchain into official systems could delay adoption. Competition from other players, such as Swift's new ISO 2022 upgrades or alternative blockchain networks, could also reduce Ripple's market share. Yet Ripple's advantage lies in its head start. No other blockchain company has engaged with regulators as deeply, built as many financial corridors, or achieved the same level of technical specialization in settlement. Even if the U.S. moves slowly, Ripple's international footprint ensures it remains relevant. The long arc. Looking ahead, the narrative is less about Ripple versus the Federal Reserve, and more about whether both can adapt to a world where real-time settlement is no longer optional, but expected. FedNow ensures the U.S. will not fall behind domestically. Ripple ensures that cross-border payments, the lifeblood of global commerce, are not left in the 20th century. In the end, the likely outcome is a layered system. FedNow for domestic U.S. payments, Ripple for global settlement, and CBDCs connecting the dots. Whether formally partnered or informally aligned, their coexistence points toward a future where payments are instant, interoperable, and global. And in that future, XRP's role as a neutral bridge asset could become not just speculation but reality. The truth between the lines. The story of Ripple and the Federal Reserve is not just about payment systems. It's about the very nature of money, sovereignty, and trust in a world racing toward digitization. FedNow is here, modernizing U.S. payments. Ripple continues to expand globally, pushing the boundaries of settlement with XRP. Officially, their paths have not merged, but unofficially, the parallels are undeniable. Their goals aligned, their timelines intertwined, their futures perhaps destined to converge. For investors, for institutions, and for everyday people, this question will shape the financial world we all live in. Will the Fed's rails and Ripple's ledger remain separate, or will they one day form the backbone of a new global system? That's the mystery, the speculation, and the opportunity. If you want more deep dives like this, cutting through hype to reveal the facts that matter, subscribe to LTL Productions. This is only the beginning. Together, we'll uncover the hidden architecture of the new financial world.